the government, in another bid to try and save the ailing economy and, of course, the ailing currency, has now set up this technical team. This while we have the finance minister over in The Hague, and we've got the governor out of the country. One would ask how these key officials being out of the country would have been able to be a part of this decision.
Yeah, well, those are the questions you're asking, and we won't bother with the politics at this point, because the central bank has taken a position already and is very rigid in that position. We would wish that they would, review perhaps their predicates so that they can just to confirm whether their view is indeed correct. Because from what the market says, and banks have been shouting at the tops of their voice for this one, is that the problem is in the fundamentals, and until that is resolved, all the actions that are taken up until yesterday were band-aid solutions, and will probably not alter the trend of the currency in the medium term.
We saw second quarter GDP numbers coming out yesterday, 4.1% growth. There are perhaps pockets of optimism when you look at the growth that we saw in the construction and retail sector, of course also the agricultural sector, in light of the drought. What did you make of these numbers that came out?
Well, they're all well and good. My worry is going forward, and one of the beasts the central bank and the government may have to tackle is inflation, and of course at this point I think the monetary tools will help, and also the government borrowing is coming in. Perhaps one would argue it's crowding out the private sector. So at this point, going forward, history is all well and good, but going forward, we might have to see consolidation, and that puts in question the performance of the listed companies going forward. So that's our concern right now.
Fiscal consolidation is what many analysts are calling for at this time. Let's just move on to look at some of the stock market news that has come through. Scangroup looking to capitalize on its JV with Ogilvvy and Mather in the West African region, moving into Ghana. Of course, this economy experiencing a growth of around 33% in the second quarter. So it's no wonder that Scangroup wants a piece of that story.
Yeah, and for us investors, then that gives us exposure to Ghana, and also and hopefully to a currency that is probably more stable than ours at the moment. So that gives us good opportunities, and perhaps an interesting story to one can invest with. Possibly give you good returns in the medium term.
And perhaps, as you say, diversification outside of the Kenyan economy, where predominantly its revenues come from at this point in time. Just looking at the stock price, 35 shillings 75 cents, down 29% for the year to date, underperforming the NSE 20. Is this a good entry level?
Difficult to say. One of the reasons that perhaps one should take caution with is because at the close of the year they are just announced a takeover, and that pushed the share price to 60, and perhaps one could argue there was a bit of that was probably a bubble, and the correction to 30 something, perhaps an overcorrection, but one would have to take into account the opportunity cost as well. Because one of the reasons why assets have been revalued so low is because of the rising interest rates, and those are I mean the T-bill rate is now well over 13%. Perhaps has possibility of going higher because of inflation rate. When you're looking at the valuations that leads to the local opportunity costs as your benchmark, then you begin to see why sometimes the share price could have dipped so low. So at this point, we're just reserving, for now, we're still looking at it. It perhaps could come lower because there's nothing that interest rates say that could.
Yeah. So perhaps wait for it to get a little bit lower from this point. Let's just move on to the technical telecommunications sector. Safaricom falling back quite a bit yesterday, really weighing down on the overall market. 3 shillings it closed at, but it has been quite range bound. Going forward, though, the data space really is the new growth sector in the telecommunications space overall. Bharti Airtel now signing a deal with Nokia Siemens in order to deploy 3G. What type of competition do they pose for Safaricom, the leader in the data space?
Well, I begin to worry about Safaricom. They quietly raise their rates, and that could lead to a bit of demand destruction, because you could begin to see more churn with customers migrating to the other networks. However, Safaricom is still a very strong company. Voice has been interesting, but even better is data. And of course, with M-Pesa having locked in many customers, we expect that for the longest time. The other telecom players have thrown everything but the sink at Safaricom, and Safaricom has still maintained a very huge market share, and churn is still actually lower than expected. So
yeah.
At this point, we still think Safaricom is a strong investment argument
in the data space. And Bob Collymore, of course, the CEO of Safaricom, has said that whilst we have the growth taking place in the data space, the voice space is not dead yet. There's still opportunities to grow that market, of course, in East Africa as well.
Huge opportunities, especially in areas like teleconferencing. Of course, there's a 4G technology which the government wants to be offered by one or two players, and then as in terms of service infrastructure, and everybody else jumps on that bandwagon. But probably one could argue that Safaricom are well positioned to take advantage of that. They've got their data business up and running, and actually their internet business, and they've got products kind of like telemedicine, which they're developing. So I think they're positioning themselves to take advantage of that market, and we think that the opportunity is available, and they're looking at them very well, so they become a very interesting investment story as well.